Yeah, so regular viewers of the show, I think, will recognize that the base case for most of the people here on the desk about trade stuff was that it's probably not great that we're going to muck up all of these partnerships and arrangements we have, but at the end of the day, human nature is that people will find a solution. We won't have a artificial, man-made crisis for no reason. And that increasingly looks like what's going to happen on the North American continent. Probably we'll figure out something like that in Europe. And then the China thing will be less frightening once those pieces of the puzzle are in place. So I think you had this nice snapback yesterday, and you've got kind of a mixed bag today. But at the end of the day, I think the fact that we're not going to have a crisis is more important than the fact that really all this is a rebranding of NAFTA. Not much changes. So a couple of things here at the margin. When you look at the makeup of the market, though, the stocks that matter, the big leading companies, all look fantastic, with one or two exceptions.
Right? Boeing, Cat, some of the other big names.
Apple, Amazon, Microsoft, all flirting with new highs.
I'm glad you brought that up. In fact, the tech sector, Jim, is hitting a record high, pace for a record close for the first time since August 29th, thanks to our data team on the markets. XLK, new high. So you got a lot of things working.
A lot of things, not everything. I mean, I think we can point to the financials and still scratch our head when will that come along.
Right?
No, you don't need everything.
You don't need
everything. And I think to the point that Josh just made, which was excellently made, I don't think we need to keep worrying about trade. I think we need to have a base case assumption that it will get resolved. When it gets resolved, you do have a march higher. We went through the math yesterday with where earnings estimates are for 2019. You can easily get another 10% rise in the S&P 500. The question is, what, if anything, could upend those earnings estimates? As long as it's not trade, then you start to look to, well, maybe inflation gets out of hand. We see some wage pressure today, at least from the likes of Amazon. Maybe the Fed gets more aggressive. Those more traditional things that happen at the end of a cycle could occur. But let me be clear. I don't see that happening in the next 3, 6, or even 9 months. I think that takes a good year to build, which means as long as, and again, Josh, you put it very well, as long as there isn't a man-made crisis, we should have smooth sailing from here.
Ed Yardeni, you got, Bob Capito, BlackRock yesterday, positive on the market. Right. Ron Barron on Squawk Box this morning, positive on the market. More room to run. Market is not at high levels, he said. Chief investment strategists all over the place, for the most part, think that you've got a pretty good backdrop. What do you say?
Well, I've been there all year. I mean, at the end of last year, I was predicting 3,100 on the S&P 500, so we're getting pretty close. I felt pretty smart in January. I felt like an idiot in February when we had that 10% sell-off. But I'm regaining my confidence here that, I'm as smart as a fifth grader anyways. So, but look, I'm expecting this market to continue to go higher, probably 3,500 next year.
Wow. Guys, agree, disagree? I mean, what's in the way? What's in the way to deter the market from going up? You get, as Josh said, you get some trade deals that are viewed positively, whether there's big change or not. The one with Canada and Mexico is being viewed by the market as a positive.
Well, if it passes, we talked about that yesterday. I think the midterm election is the risk, and the tax cuts 2.0, that not being passed by Congress, and the deal that was put forward yesterday, again, that needs to pass post-midterm election by Congress. So those are the risks, but I agree with everything that everyone's saying. I think you could use words like dispersion. I think you could use words that we haven't used in the marketplace for the last couple of years. Value coming a little bit back, more of a little bit of a global orientation.